Good morning everyone, this is Hadjikyriacos, analyst at IronFX, bringing you the morning comment for the 1st of June. Aussie slips after soft Chinese data. The Australian dollar had a relatively volatile session overnight. Aussie USD gained initially on Australia's strong retail sales for April, but gave back all of its gains to trade even lower in the next minutes following the release of China's Caixin manufacturing PMI for May. The Chinese index fell unexpectedly into contractionary territory for the first time in almost a year, generating renewed concerns about a slowdown in the Chinese economy. Bearing in mind Australia's heavy trade exposure to China, should market participants begin to focus increasingly more on the prospect of such a slowdown, the Aussie could remain on the back foot for a while, especially considering the continued decline in iron ore prices over the past couple of months. As for today's highlights, during the European day, we get the final manufacturing PMIs for May from several European nations and the Eurozone as a whole. Given that the final figures are expected to confirm the preliminary estimates, the reaction in the euro could remain relatively limited, unless we have notable revisions. In the UK, the manufacturing PMI for May will be in focus, and the forecast is for a decline. Even though this could hurt sterling somewhat, we think that investors may prefer to wait for the services index that will be released on Monday before assessing how the UK economy performed in May. The service sector accounts for the vast majority of UK GDP. What's more, we think that over the next week, ahead of the general election, UK political developments will probably overshadow economics, and thus, incoming opinion polls could remain the key driver of sterling. New polls showing that the Conservative-Labour gap continues to narrow could weigh on the pound and vice versa. Indeed, yesterday, the British pound recovered notably after several polls showed the Conservatives being safely ahead, casting doubts on the recent YouGov poll that showed Theresa May and the Conservative Party failing to secure an absolute majority in Parliament. From the US, we get the ADP employment report for May. The forecast is for the private sector to have added 185,000 jobs. Such a solid figure could raise speculation for the non-farm payrolls print to also meet its forecast of 185,000 and thereby support the dollar. We also get the ISM manufacturing PMI for the same month. Expectations are for the figure to have declined marginally, but to still remain safely above the critical 50 mark. In case of a solid ADP print but a modest slip in the ISM index, we think that investors may focus more on the ADP figure, as tomorrow's employment report will probably add the finishing touch to market expectations about the June rate hike. USD yen rebounded yesterday after it hit support near the 110.50 territory. If the ADP print is solid today, we could see the latest rebound continue and perhaps challenge the 111.50 territory. A decisive break above that level could set the stage for further upside extensions towards the 112.10 zone. We have two speakers on the agenda today, Fed Board Governor Jerome Powell and ECB Executive Board member Sabine Laudenschlager. It would be particularly interesting to hear from Powell, considering that he will be addressing the Economic Club of New York and that he is a permanent FOMC voting member that has not expressed his views on policy recently. For more information, please read the full comment on IronFX.com or download our app and get all the information you need to trade. Also, you can follow us on Twitter, like us on Facebook, subscribe to our YouTube channel, or circle us on Google Plus to get more trading ideas. This is Hadjikyriacos, analyst at IronFX, wishing you solid trading.